like we've been telling you, Kotak Mahindra Bank will buy a 15% stake in MCX from Financial Technologies for 459 crore rupees. And joining in to analyze this deal is Mr. Anil Singhvi, Managing Director, ICAN Advisors, a veteran of many market deals. Good morning, Mr. Singhvi. This looks like a killer deal, especially if you looked at the last closing price of MCX. Almost 24% lower than the prevailing market price was where the deal has been locked. Is this because there is this impending tax liability because of some unwarranted transactions that the PwC report pointed out between MCX and FT? How come Kotak could get away with this 24% discount?
Morning, Lata. I think you raised a very pertinent question which would be engaging the minds of everyone. But let me tell you first that it's a win-win-win. It's a good deal for FT. It's a good deal for Kotak Bank, and it's a good deal for MCX. And let me explain to you before I get into why 600 and why not more and why not less. It's good for FT because FT was asked by the regulators to hive off this shareholding of 26% in favor of any fit and proper person, because the allegation was there that FTL is not a fit and proper person. So FT is happy that they have found a buyer in Kotak of 15%, because as we started this whole process in March 2014, we were almost in the process of identifying a prospective bidder and a buyer. FMC changed the guidelines on 6th of May 2014, saying that no buyer can buy more than 15%, and buyer cannot be other than a bank or an insurance company. So our universe of the buyer also got limited to the extent of either a bank or an insurance company, and only to the extent of 15%. But our basic concern at FTIL was not only to find a good buyer, but a buyer who is going to continue with the technology arrangement with FTIL. So that's a very important factor which most people have missed out on this, that MCX will continue, and that's what Kotak's agreement with us is, that MCX will continue to buy the technology and the service support from FTIL. Second, for Kotak, I think it's a good deal because they wanted to get into exchange platform. They started some time back on that, but it wasn't a very successful situation. So for Kotak to get into a financial infrastructure, it's a good deal. And for MCX, I think it has been, for last 6-7 months, MCX has been in a vacuum, because after December 2013, when FMC wanted FTL to get out of it, there was a huge uncertainty that who would be the anchor or who would be a significant minority shareholder in MCX who will provide a vision and a direction. And people were getting apprehensive of that, because you will not deal on the exchange unless you know that your deal is guaranteed, your money will come back. All those kinds of fears were there in the minds of the people. So I think now Kotak Bank coming in with 15%, so it's not the best thing for Kotak. They would have loved to have 24%, which is what then the guidelines were. But regulator is a regulator, and you have to go by the law of the land. So they're happy with 15%, which is a significant minority stake. And good for them that they have such a large piece of commodity exchange. In fact, according to me, going forward, MCX should get back to the kind of a past glory, and moving forward, perhaps the largest commodity exchange on earth. So I think it's a very good for FTL, it's very good for MCX, and it's very good for Kotak. Now your question to that closing price on Friday was 786 versus 600. One can't take one-day price, and this is not a process where all of a sudden one has sprung a complete surprise that, Sunday evening there is a deal announced and no one knew about the deal. I think it was a very open, transparent manner in which this transaction has taken place. There are not many examples in India, I can tell you. I've been involved with the deals for such a long time, where you run a very open, transparent bidding process, which we started on 7th of March. So the price of MCX for a very long period of time was hovering around 600 rupees. It's only in last 10-15 days that speculation got very rife on this, that perhaps Kotak is going to buy a 15% stake in MCX. Second issue is very clear, that one has to look at a buyer of an asset versus a buyer of a share. Buyer of an asset would look at what the really intrinsic value of that asset is, what he can do. Obviously, he can't pay that to the seller. What he can do would accrue to him over a period of time. And secondly, if you exclude the last 15 days of speculation, which is also built on this hope an expectation that Kotak Bank will buy. The 90-day average price was 600. So more or less we have captured that Kotak Bank had shown this interest. They sent a non-binding bid way back in April.
Mr. Singhvi.
It was at 550. So when you mirror it with all these events which have taken place from then, and then also he could buy 24% in April when he sent the bid. So we took much longer time to convince him that he should buy 15%, and 15% is what the law of land is today, rather than buying 24%.
Mr. Singhvi, this is Varinder, sir. I have two questions from my side. One is the liability issue, which you mentioned. No one is clear about what could be a possible tax liability on MCX going forward. We hear that Income Tax Department has opened last 6 years assessment, and that is one issue, which market is grappling to understand. My second question remains on the board. Will Kotak Mahindra Bank, get a board seat? And do you have any idea on the board composition going ahead for MCX?
Whether your questions are very, very valid, but I have no answer for the simple reason that FTIL lost all its whatever, I wouldn't call it a control, but whatever that a large and significant shareholder into MCX, because perhaps FTIL became a complete person non grata as far as MCX board is concerned. So we have no clue. In fact, if you look at a PwC report, PwC report was earlier released in bits and pieces, and then there was a huge amount of minority shareholders who were wanting to have access to the report. Then the full report was released. Then there were selective leakages of this that IT department wants to reopen and all that. So we are also watching your tickers. As FTIL, I can tell you that we are watching the tickers on CNBC and to understand what's going on. We have no clue. Nothing has been shared with us. So we have no idea what the liability is, what PwC's allegations are, and what the income tax assessment is going to reveal on that. So with this kind of uncertainty which has been built around for last many, many months, obviously I think it's a very good decision by the Kotak Bank and for Mr. Uday Kotak that he wants to get into this, revive this whole situation, address those issues of PwC and the concerns of the PwC report, and look at what IT department really wants to allege on this. And as far as related party transaction is concerned, let me tell you, Varinder, you know it better than I do. I think most companies in India, today have a transfer pricing issue. So it's not something very big about MCX and FTI. Every company which has some dealing has been accused by IT that there is a transfer pricing, and they are liable to pay huge taxes on that. Whether those taxes will be finally held by court and Supreme Court as valid, I think time only will tell.
So last question, from my side. Since these shares were logged in, FT shares in MCX,
yes.
What is the timeline of the approvals we can see? Did you had a word with SEBI before this deal commenced? So investors can expect how much time it will take for the final deal to get sealed and take all the necessary approvals.
Varinder, the point is very clear that FMC wanted that FTI should get out of this because they are not fit and proper and find a fit and proper. So if that be the case, it is not a question of that there is a seller who wanted to willingly sell the shares. Here is the case of a seller who has been dictated by the regulations that they must get out of it. Since they have done it, I think it is incumbent on the regulators, whether it is FMC or SEBI and all that, in the larger interest of MCX and in the larger interest of an infrastructure asset like MCX, which is a national pride, that approval should be given soon. Because why should they sit on the approvals? I don't think there is any other bank or a person more fit than Uday Kotak in financial sector, at least in this country, who can be questioned on his integrity or fit and proper. So I think, according to me, it shouldn't take more than 2 to 3 weeks to get all these approvals in place.
Fair enough. Of course, the story doesn't end. We will have to look at all the nitty-gritties panning out. Not the least would be the tax issue. But yes, perhaps a winning deal for Kotak to have got it at this price, especially because...
It's a winning deal for all three. So you put it as win-win-win as I believe. Okay?
That's a matter of opinion. That's your opinion, sir. That's your opinion. All right. Thanks a lot, Mr. Singhvi, for explaining the deal to us.